Hey guys, John here, Mr. Forex Fire. So it is the 8th of June and it's just before 8 o'clock. I'm going to share the screen and we're going to have a look at what the market sentiment is, or at least what I think it is. And we can see we came in a downtrend. We came up with a shift in market structure, taking a high, sweeping into imbalance of fair value gaps, coming back down to try and take these lows here. We didn't come as low as this. However, we swept the low here, and I think we more or less came into an imbalance without going too deep diving. This isn't about what's going on here. We're just trying to get the feel of what's happened with the market so far. And as we move along, we've taken some of the buy side trend line liquidity here, coming back up to the tippy top into the liquidity top here, coming down, sweeping and trying to induce sort of selling. We swept the low, the sell side. But as we've done that, the pattern of what we normally do on the ones to watch is played out beautifully. Look at this. If you're watching and you do these ones to watch that we do in the Discord, this is played out on the like a one to watch pattern. Absolutely fantastic after a sell side swoop. And then we failed to break the low, and the sentiment at the moment, it's slightly bullish in fairness, because we've got a low, high, low, high, come down, tippy top, tippy bottom, I should say, a double bottom, and then we're out into the market structure shift, higher low. We haven't broke structure to the high, so we're stuck within a market range. Okay, I went over this sort of stuff yesterday. This to this is a range, low to high. We're stuck in that range at the moment. Okay, so I'm just going to leave that bit there at the moment. And I'm on the 15 minutes, so I'm possibly going to look for sells today, if I'm honest, on what I'm expecting. But we're going to do what we normally do. We're going to mark out the 15 minutes high. And I'm going to go to the low, okay? Because we come down. This is a low here. I mean, we had the high right here as well, so it'll be a bit of a strange one today, I think. Bit of a strange one today. Now we'll do this, we'll do this. And then I'm going to take it down that 1 minute. And then I need to feed in the time window. Oops, I need to move that's 8 o'clock. And it's normally till about, I think the window is till about 9 that we're playing on. So we've got the market structure low, market structure high. Okay, and the principle is, you can see these fair value gaps here that all populate as we move along. But what we're needing to see, okay, guys, is what we call confirmation candles. Now, the confirmation candles are engulfing price from the previous candle. Bearish, it'll be red. Bullish, it'll be green. So you can see here, the price candle here was small. The next candle, which turned green, was bullish, and it engulfed the whole of the price action. Excuse me, a bit of a dry throat. And then as we come down, we're still within the time window. This candle was bigger than this, engulfing it. Bad chest. And you can see on here, it just engulfed up. Same with this one, just bigger, and it takes all the price action. So we're digressing a bit there. We're going to need to go into our window. So it's 8 o'clock at the minute. We're coming back down into the fair value gap on here, but this is not what you call confirmation. It's because it's just populating as we go into the window. Now, I said we were looking for sell-offs, and we may get a confirmation straight away with regards to a sell. So I'm just going to get the short ready. Going to be an engulf, and we might get an entry straight away on this. 25 seconds. because this is engulfing that most certainly. So this could be a quick entry, this. But we learned from our mistakes at the beginning of the week with this as well, if you remember. But we'll go with it. London hasn't served particularly well for me since the start of testing this. So is that a confirmation? I do. Sell, profit, 1% sell. So I want to put this here. Do template. Silver bullet. That's our 1-to-1. There's the entry. Get my wand out. And like I say, as you can see here, this is engulfed, this price action. I don't like it when they come in too early in the session. Simply because, I mean, obviously you want a bit more price action, to be fair, but I do believe we're going to be getting sell-offs today. We'll just see what happens. But the preference of this strategy is one hit, one shot, walk away. If it comes in, it comes in. And then we'll just move on to the next. The New York sessions have been pretty good for us, to be fair. What I'll do, guys, because I'm going to try, like I say, I'm trying to make these videos short, concise, and sweet, just so they're not going to string out for you. I don't want them any more than 10 to 15 minutes long. So what I'll do is I'll pause the video for a little bit, let a few candles populate, and then we'll talk a little bit about the price action as we move along. The engulfings here, okay, and we've got the fair value gap on this part here as well. Okay, so we're looking for that 1-to-1, a profit of just under 100 quid. And we'll see what happens, guys. I'll be back in a short while. Right, so as we go, guys, we've got some consolidation coming, stuck within the market or price range of this. We have moved out of the liquidity here. So as you take liquidity, you normally got to create liquidity. So take liquidity, the creation of liquidity is going to be coming into the fair value gap. It's touched into that nicely. I'm just waiting to see if we get this drop of 10 pips. And the method on this is 10 pips for 10 pips. And like I say, I'm always transparent, open and honest. The London sessions have been non-productive for me on this. Whereas on the Euro USD, on the New Yorks, I'm using the same asset, the same tradable asset on the New York. The New York has been producing a few times this week. I'm getting a couple of wins. I think I'm getting 2 wins on the New York, and I've had a few losses on the London session, you know. So I'm not holding too much hope out for this morning session, to be fair. I think as we get deeper dive into this, we get further data as time goes on. Again, there could be an argument for to just, we'll only take New York session ones. And this is what part and parcel of forward testing is about when you're trading, you know. So again, it's just one of them things. You do a block test of so many trades, which is the stuff that I like to do. Which again, just to give you some transparency, as I always do in my videos now, this is the ICT silver bullet. What I'm doing at the moment, I'm around about just 2% down at the minute. My other ones, which I did, which was the scalper, which I done 100 trades. I had the profit factor 2.83. I do this every video because I've got to be compliant. I need to show you what I do. Seen the profit factor was there, so we increased the risk to do 0.5% or 1% per trade, 21% for a month of 100 trades there. And now I'm taking that method into the New York US 30. And after 3 days, I'm 3% up on trading that same method. And that method is all templated from this sort of stuff, which is a fantastic template, to be fair. But from there, guys, I mean, like I say, I'm forward testing, and that's what we do. You do, like, you get places where they do like maybe 40, 50 tests, but I'll do the 100 block trade tests. And at the moment, the price on this, I want to see price sort of structurally. If I can get price to break below that, then we could see some sort of little bounce maybe into a fair value gap left behind here to then come down, come back up and do that. That's what I'm expecting. That's what I'm hoping. This is what I'm hoping. I'm going to leave this overlaid on there actually, just to see how the price does behave. See if we get that sort of reaction. At the moment, I'm liking how it's staying below the entry part of this. However, there is a draw on price above here. If we just mark these in, the thing that's scaring me at the moment on this is the draw on price of DOP, which is imbalance here. And we have a point, I would say, of no return here. Okay, so if we get price decides to shift market structure wise into these mitigated areas, okay, and it pushes and it breaks through this part, it's going to want to take the high. You see this here, the previous into the market session high. If we get a shift in mitigation into these two and it bounces off here, it's going to go for that instantly, straight away, guarantee it. This is why I'm wanting price to sort of take the liquidity low here, do a little bounce off. As it's took liquidity, it's going to create liquidity here, okay? And then I want a second take of liquidity, and when it does that, I want it to take maybe a fair value gap, which is probably left behind here. And then because we're building liquidity to create it, I then want to take the RTDs to drop even further, retracement into 50%, and then do another drop, if that makes sense. But at the moment, price is now starting to get, you see how I marked this up? Beautifully, I marked that up into the imbalance. You can clearly see the imbalance there. The tram lines has come onto this. If it goes and mitigates through this, the next one it's going to highlight is this here. This is why when you do your trading, you need to be able to mark up and keep marking and doing it until you're sick to the back teeth. The more you do it, the more you're going to see these things. I mean, this is a nice indicator. I don't really need it, but I've put it on just to sort of highlight the stuff that I'm doing, you know. So it is a useful indicator for people that are not too used to it. Let's just take a look. Just want to get rid of that. Just want to get rid of that. Just get rid of that. All right, so I'm going to pause the video. I'll be back in a short while. Yeah, so guys, as I've marked what I'm expecting on this side, on the sell side, again, we've got liquidity residing here, okay? So the one thing, like I say, and I don't want to jinx it, the one thing I don't want to see is this, a mitigation into this, teasing a bit like that to then mitigate, push through, and then take out that high. That's one of two options that we're going to be seeing, okay? Like I see, we've got a draw on price here. And if we move further along underneath here, the draw on price underneath, we've got fair value gap here, massive one. We've got around about on the halfway point, we've got, like I said, we've got the 50% here liquidity. So we've got a structure of liquidity residing here and a draw on price on the imbalance of the fair value gap as we move further down. So that's the structure of play. This is my field of play. This is what I'm sort of expecting. Just to run you through one more time, we're stuck in the market range, if you look, of the confirmation candle. Okay, now the confirmation candle is bearish. As I run through this again, the confirmation candle is an engulfing bearish. We come back into a fair value gap. It's mitigated into that. However, it's double topped this here, so it's formed a liquidity of buy side. We've got a sell side liquidity as well, to be fair. You can see here, okay, we've got a double bottom, okay? So we're within a range, we're consolidating. So I'm wanting the range to be broken, come back in. This will be a reason to drop. Another take on a reason to drop, double liquidity created. A fair value gap. I would like to see the red tram lines get formed in this area here. Come back into mitigate into that. If it does do that, here comes the follow through, hopefully now. And then as it does the tram lines, I want to see it form around about this area, or predicted this area, because we've had two liquidity areas formed. We've had a creation on a pullback on an inducement, then a drop down, then a 50% inducement back in, and then the finalization drop. Now look at this, red tram lines. Look where my price line is. Like I say, guys, this is fantastic. But again, for me, this here hasn't been a big enough drop. I would have wanted to see this here form around about here. So I had that more or less spot on for an area of comeback. We might still get it. We might get the drop down, to be fair. It just might be a little bit weaker. But the weaker that the sign of this is, it's going to be harder for me to be confident, because then it might want to come up, search the areas up here of the liquidity of, like I see the candle here, and then more so if it takes a sweeps out, it's then got to go for the double topper. Okay, and if it gets the double top, it certainly want to go and spike into this. So I don't want it to get too strong. If I just go to the Euro USD, let's see if I can get. Just rose up again. I can't get the currency strength on it at the minute, guys. But you know what I mean. I was going to look for the currency strength to see which was better than the other. Price is just, it's been hovering around this 50% of that confirmation candle, you know. But that's a structure point. You've seen this. This came in beautifully for, like I say, the fair value gap. But this candle here, it didn't break enough down here, if that makes sense. Well, you can see it's just double tapped. It's tapping, so we might get a third attempt at trying to push down below that to come here to then do a reason to drop, and then give a further reason to drop, pull back into another fair value gap. So it might do it again, and then we've got the liquidity sell side, massive drop, come back into this liquidity line where it was further on the left hand side, and then a drop down. I want to see the move happen within the next 5 or 10 minutes. We are on a little bit of profit. I'm not going to close no profits out. It's either win or it's lose. That's what this method is about, okay? I'll pause the video. We just need to stay away from the draw on prices on this top end. Be back in a second. And there we have, guys. Again, look what I've got here. I've got this mark to the T. We've got the imbalance here. I want to see a little push. I don't want to see this mitigated straight away with this candle. I want to see the push down. So now it's trying to come down to this liquidity area. This is going to be like a little bit of a brick wall at the moment. So we might have a little bit of falter around in here, a little bit of a fumble about. So we'll either get the break or we're going to get the retest into this. This will disappear. And then after that, the only draw on price to the sell side, it has to start to mitigate and attack into this grey box. If it stumbles and it fumbles around too much on this area, it's then going to want to try and take all these little bits of liquidity that is being built on the buy side, you know. So I want to see structurally, I want to see this hold. I needed to hold tight because I need to see this main line to be attacked. Because if this main line gets attacked, it's strong. It's strong for a sell, because then it can have a little bit more of a mess about. It can basically piss about on the market, and then the drawn price will be this bit here. So I don't mind if it pushes and breaks through here, because then it's got a line of defense on the higher side, if that makes sense. You don't always just want to get a sink drop. They're nice to get those sink drops, like in a sinkhole, but again, you want stuff to be, the breadcrumbs to be left behind. So when that bird of price goes back to where it needs to go, it's picking up the little crumbs of liquidity that it's left behind, you know. And it's just like a line of defense for you. Now, we're coming into the liquidity area now of what I said would be like a brick wall. Now we're getting a bounce off that, which is to be expected. Again, if we scroll out of that, you can see here, this is the line here. And it's had a sniff of it. It's had a sniff of it, and it's thinking, I don't want none of that. But we wanted to push through here. We want to push through Come on, let's get that push through. Now we've got a fair value gap, which is being created here. Okay, that's been left behind. So we've got another line of defense. So there's loads of draw on prices to the buy side, but now we're forming the other. Now we've got the close of candle, open of a new one. This is even better. If this pushes through here, which it looks like it's done now, we've now got another line of defense and a draw on price. I've got a lot more confidence now that we're going to come down and push into this. Okay, this is reacting nicely to the way I was expecting. We're building a fortress behind us as we're moving down, if that makes sense. Because if it does come back, it's going to want to push. It's going to want to do little bits of reaction before it fully mitigates, before it comes back and fully mitigates. And then again, the drawn price above. So we have got more confidence out, and now we're coming into the imbalance area of all of this here, this big imbalance area, big drawn price on that. Now prices wanting to come up to, like I said it would possibly want to come to falter into this, and then I think we will get the drop. We're now entering that imbalance area of right back from a few days ago, and it's good to see this sort of stuff play out. You know, it's good. It's forming another little mini. Here it comes into this imbalance. You see how I marked this bit out? It's going to come back into mitigate and touch into that. There we are. There's the mitigation. Is it just going to leave its wick behind? 50%. And then hopefully we've got what? 8 seconds, 7 seconds. I want to see this structure hold with this candle. Then I want to see an open of a new candle, and I want to see liquidity taken down here. We get a liquidity take down here. This is even better if we get that. So structure, we want this structure to hold on this candle. We want this candle, it's got 50 seconds to come down and take and swoop the sell side. Let's see if we can get that. It's going up to mitigate into that imbalance. I mean, if it mitigates and fully takes this, I'll delete this square off. It just means the next line of defense is this bit here. It's wanting to take it, and if it's gone as close as that, it's going to take it. Oh, it still holds. It still holds its structure. 15 seconds. Come down to at least 50% on this, just to give us a bit more bearish move. Come on. We've had bearish momentum coming down as we've taken the liquidity. So I'm used to this. You take liquidity, you're going to create it. Now, I said as you take liquidity, the creation is this sort of stuff. So again, I marked this up. Maybe the creation of liquidity is going to be the form of coming back in to take this bit to then drop down. So you see, I've been marking these areas before the price fluid action came. We might hit lucky, and we might see that this one is going to be the one that it's just going to react from rather than the higher one. Okay. Trading the 1 minute can be so emotional, but I'm at one with the price and the charts to be fair. So I've got a good understanding on the fluid movements of what it's going to do. I want to see that the sell side taken here now. If I can see this sell side taken, we're then going to run deeper. See this here? I want to see the sell side taken. If I see the sell side taken, it's going to react bouncing. It should fill out this gap. It's just not wanting to be here at the minute. We've come in once, twice, 3 times to that previous imbalance. I want this structure to hold. There's just a battle. There's a battle between the buy side and sell side at the minute. From that down to that, it's only 2 pips. Believe it or not, that's only a 2 pip gap. And from where we are at the minute down to TP, we're about 3 to 4 pips away. I'll pause the video. You know exactly what I'm going on about with regard to the price action, the fluid movements, the fortress we're building with the imbalance areas. I'll be back in a short while because I don't want, like I say, I don't want these to go on for too long. Look at this, guys. It's now coming back into the line of defense, which is a little concerning. We've got a confirmation bullish. We were around about 3 pips from hitting the take profit, but again, forward tests, stick to the rules, stick to the situation. I did say we may come back into this, okay? Part of the, you see this here? I did say we come down to here. It came a little bit lower. And once it come in here, I did say we'll come back into this area. You see, so it's reacting the way I wanted, okay? So when you look at this here, I said we would come out of here. We got that here, okay? So we've got that line here. I did say we would come down to here. This is where we've come to. I did say when we come down to here, okay, we go back up. It's reacting from that area, in fairness. So this is playing out absolutely spot on, to be fair. However, this is where it does get a little bit of concerning, because we had the fair value gap here. It's confirmed another one within this one on the confirmation bullish. So the engulfing candle has come across the liquidity here. This is either going to react from this, and if it does react from that and then breaks through this fully, we're then going to start seeing the take of this liquidity here, and then we might get the take on the top. What we need to see is that the confirmation bullish, which is what I was expecting, worst case scenario, into this area, which is what I marked up. And then I want to see a take come down. As I see the take come down, I want to see price price break below this, but more importantly, take this liquidity here for it to go even further. It's taking this now, so it's going back towards entry. We've got another confirmation bullish, so that's even that's even worse for us, to be fair. We still hold the structure that we have, though. The fair value gap's got another fair value gap on here. Get this back over here, John. Get me one over here. So yeah, like I say, we're sitting our hands. This is, like I say, take of liquidity from up here. Inducement is to try and flush the sellers out, and take profits. Or, like I say, people that have moved the SLs to just above break even, still got all this SL. So we've had a break of liquidity here. We're now having a pullback. The inducement is for those sellers that have possibly, they've been in profit all the way down here, and when they got profit all the way down here, they've moved their SL to here, if that makes sense. So they may have just been flushed out. Now price may want to start to do what it's initially doing, which is go to the downside. So we'll see. We'll see if this has just been a flush out on behalf of the market maker, as they call it, okay? I'll pause the video. I'll be back in a very short while. Hopefully this is just an inducement, a retracement to flush out the people that were going for these one-to-ones, and for the people that have moved their SL to just above break even, because I can guarantee those that have done that, okay, that's barely a pip above the break even. So I know people that have been doing this or using this, they'll have SLs there. They'll have either been knocked out of break even, or they could have been knocked out of a take partial at break even. So they'll still won, but not as much as if price is just going to do what it initially wanted to do, which is break a structure, sell side, come down, create liquidity, or take liquidity created by flushing out the sellers, and then getting the move to the downside, taking out this liquidity and going for the final TP, that one-to-one. Like I say, I'm forward testing the structure points. I'm either going to take the loss of 1% or I'm going to take the win of 1%. And I'm doing it over 100 trades. And whichever comes first, either a -10. If I get a -10 on the structure of play and forward test on the ICT bullet, then the strategy and forward test ends. If I make it to the 100 trades before I get to a -10, we see what the final outcome on data, and we'll look back on the analysis and the analytics on it, and we'll see what sort of growth we got, okay? But for now, I'm going to pause the video. I'll be back once this has fully played out. Now take a look at this, guys. We're now starting to come up to attack the last line of defense, as I was calling it, which I didn't want to see happen. However, this happened the other day, and when I look back on the fair value gap, this isn't in the market structure, so it wasn't compliant or whatever you want to call the word to the conditions of where we trade from. But this happened the other day, and like I say, 1-to-1s, and this would be a 1-to-3, and that happened just the other day. However, this is now going to mitigate through this area, which I marked up, and you can see the tram lines have actually come on spot on there. That's actually gone through that. It's now going to want to go through this, which it's doing. And I said, as soon as it does that, it's going to attack and take us out. So we was 2 to 3 pips, if that, away from hitting a 1% win today. We're now around about, I dare say, 2 pips, 2.5 pips from taking a -1. And again, what I'm enjoying about this is I'm going with the market flow, if that makes sense with you. This is fully mitigated into this as well. You see here the wick? If I just move that along, you can see it's fully mitigated into that there, which is what I marked up earlier. And again, marking these things up, it's absolutely crazy. If we see that's an entry there, based upon the fair value gap. If this turns now from where it's been at, that's a 1 to 7.65. The likelihood of this turning and going back into a 1-to-1 is very remote, in my opinion. I do think structure-wise, we're going to come and bounce off here, come up to take the full imbalance on here, bounce back down, and then I think it's going to take us out altogether. But it's been good to document this. It's been good to watch the price action. What I had marked out down here was absolutely on the nose. It was on the nail, hit the nail on the head with regards to the fluidness of the price action. However, the issue we had with this is once it dipped its toe in the water of imbalance or fair value gap down here, it just didn't want to entertain it. So it crashed through all of these barriers on its way back up, and it's tested everything from the fair value gap here, this fair value gap, back at the entry of the consolidation zone, the double top it crashed through. It went through the fair value gap before the market opened, and then structure high to structure low. Okay, there was one last fair value gap, which is this here. One last fair value gap, which was this here. Okay, structure high, structure low before the market window of trading was open, and it's come all the way back up to test that structure high fair value gap. Like I say, if this drops and it goes all the way down, yes, we've got a 1-to-1, but from an entry from here, it would populate a 1 to 7.65. And I'm not here to enter any more trades. I'm just here to see if the structure 1-to-1 is going to give us that win or give us the loss, and then I can document it. Okay, pause the video. Hopefully these little bits of snippets that I'm doing has been insightful. I shall be back in a second. Right, okay, guys. So like I say, I'm pausing and recording, so the video doesn't go on too long. However, I don't want to sort of stretch out because I've got to use my computer to record other things for my Discord. At the moment, we are in the drawdown area. Again, we are testing this to either fail or to win. At the moment, it came back up into the fair value gap of the last line of defense. Now it's starting to drop. Okay, so if this comes and hits our target, we've got the 1-to-1, but this could have, on an entry, given a 1 to 7.65, which is huge. We were basically, a pipette away from stopping out. We'll see if this actually goes further down and hit the area. Like I said, I'm going to end the video here. I'll do an update of the screenshot and put it inside the Discord. I'll also put it on the YouTube channel. Okay, so I'll stop the video. I'll update the video when I upload it later. Okay. See you later.